I hope आपको इससे satisfied है इस answer से?
जी मैडम मैं satisfied हूँ.
Okay, thanks very much for calling in. Up next we have Dinesh Chandrasekhar who calls in from Chennai. Hi sir, how can we help you?
This is Dinesh from Chennai. Actually, I would like to know buy stocks from NYC market, but don't know how to proceed further.
Okay, do you have a portfolio of stocks within India as well? Do you have any exposure to the domestic market?
No, this is a first time experience. I am new to the market.
Okay, and any reason that you have chosen to go the NYSE route on your maiden attempt?
Yeah, actually I would like to buy specific stocks from NYC market. That's the reason.
Okay. All right. Sharmila, anything else you want to ask him?
No, not really. I think you asked the right question, that why do you want to buy stocks in NYC? Because really speaking, okay, let me come to that part first. So I think directly answer his question first. Yes, I think it is possible now because the laws say that you can invest up to $25,000 on a yearly. That's a maximum limit per year in equities outside India. So you would be able to invest in the US. And I think the procedure is that you I've never done it myself, but what I believe is that you need to sign up with a US bank, which will in turn tie you up with a broker, and then you have to follow they will pretty much answer all your other queries about remittances and taxation, etc. They may require a minimum balance to be kept with them. The brokerage is typically higher. So there could be a minimum order size that some banks would require. So there, depending on who you approach, you could have, to sort of meet those conditions. There are some Indian brokers also who offer these services. I believe ICICI, Kotak are some of the names I've heard that could be offering this service. Another way of approaching this is, you have specific stocks in mind, but if you didn't and you just wanted to invest in stocks on NYSE, then you could put your money in an ETF which buys into stocks, US stocks, and I think Motilal has a product based on that. So coming to the next part of the question is that which I think is the more important bit is that really speaking, if you look in terms of returns, the returns that you get in Indian equity are far more than what you get in the American market. So I think that should also be a very important factor to consider when you want to invest in equity. I think even mutual funds, you can take advice from Mr. Harsh, but basically I think if you've stayed invested in mutual funds over a period of 3-4 years, you can look to like 18% kind of a return, which I think is unheard of in the US markets. And you want an investment that sort of beats your inflation and then leaves something on the table for you. So please look at that also before you decide whether you want to put money in stocks in NYC. But yes, it's possible.
All right, Harsh, you want to comment on that one?
So I think another thing that I would like to caution you about is the fact that there are several tax issues. I mean, for a small time investor, I don't know the amount that you are talking about, but the income tax issues, you'll have to report all this in your income tax. Please remember, on the gains there will be tax in India. Obviously the exchange rate, and when you remit it out, you remit it out in dollars. Assuming you need the money back in India, you will have to remit it back, and the dollar rupee exchange rate could work for you or against you. So I would suggest that unless the amounts are very large or you have a huge requirement to invest in a very specific stock, this is something that that a small investor should stay away from.
All right, thanks. Some good advice coming in there, and all of us are educated with regard to that query as well. But just taking a look at the Nifty suddenly went lower towards the 7,800 mark. In HDFC, the big heavyweight, there's being a little bit of a troublesome boy there. You just pull up HDFC, you'll see that heavyweight sold off. It has close to around 6.5% weightage on the Nifty, and it moved for the low point of the day. So that's what pulled the Nifty lower. But Tech Mahindra, that stock's doing quite well. So some defensive buying is what we're seeing. Stock holding with a gain of around 2.5%. Slip into a short break, come back, we'll answer all your queries. Stay tuned.
CNBC TV 18, celebrating 15 years of leadership.
Hi, welcome back. Here with your stocks. Our two experts are with us, so let's answer some more queries. Anmol Gupta has now called in from New Delhi. Hi, Anmol. Anmol, can you hear me?
Hello.
Hi, can you hear me?
Yes.
Tell me,
Hi.
what's your question?
I want to invest in equity shares on a long-term basis. Currently, I'm working. I can invest approximately around 4 to 5,000 per month.
Okay.
I want to invest on a long-term basis.
Okay, so you are a new investor, right?
Yes,
So
yes,
far
I'm
you
first-time
have
investor.
absolutely no exposure either to mutual funds
No.
or to direct equity.
No.
Okay, so this is a question I'm actually going to toss to both our experts because I think you're better suited for mutual funds, but I'm going to let them do the talking. Sharmila, because he's asked for direct equity, you go first.
Yeah, just a correction on the earlier query. The amount is 2,50,000 because it roughly
Okay.
it works out to 1.5 crores per year, which is the maximum permissible allowed for investment overseas. Coming to this specific query, I figured as much from the query that this is a first-time investor, so I think it's better to stick with the large cap stocks, stick with good quality names, blue chip companies, and try and do an SIP on stocks. So select maybe 6 to 8 stocks, pick one stock from every sector. You can go with a Larsen, for instance, from the capital goods space. You can go with a pharma company, either a Dr. Reddy or a Sun Pharma. You can pick a large cap IT, an Infosys, TCS, Tech Mahindra, HCL Tech, have these in your portfolio. So, you know, have something from the FMCG play like a Dabur, an ITC, an HUL, and then sort of keep buying a stock every month. And once, suppose you pick 6 stocks, so for 6 months you've put 5,000 in each of them, and then just repeat the cycle and, you know, keep doing it for over 2 years or so until you build a solid base portfolio before you can really think of venturing too much into the, you know, the riskier stocks or plays. So as a first time investor, that really would be the advice that I'd give you.
All right, Harsh, let's get you also into this particular reply.
I think the one thing, please have your expectations right. If you're going to be investing in equity, please expect that you might even have some loss of capital in the short term.
But you don't want to actually go ahead and tell him to choose mutual
Absolutely.
funds.
No, but whether he chooses mutual funds or equity, if the expectation is not right, he is going to be disappointed, and you don't want a first time investor to get disappointed, because then he'll quit the market altogether. So please have your expectations right. Equity is in the long term, and long term really is 8 to 10 years. The method you have chosen is right. Doing a systematic investment every month in equity reduces your risk. Continue at it for the long term. And for a new investor, I would strongly advise a mutual fund. If you need a tax break, slightly riskier, but look at an equity linked savings scheme. If you don't need the tax break, you can be conservative and stick to even a large cap index fund, I mean a Nifty fund, so that you don't really take a risk on the fund manager, or you can take a good large cap fund. So I mean, the idea is ease into this investment, have your expectations right, so that you can use it as a step to invest much more in the future.
Right, all right, Harsh, let's try to squeeze in one final query. It's coming to you itself. Vishal writes to us from Pune. He's been investing 1,000 rupees in each of those funds that should flash for you on the screen. He wants to know whether or not he's invested in the right funds. All those funds, let's get them up for you on the screen. Yep, those are the funds.
So I think quickly, the funds are good. One of them, of course, is an infrastructure fund, that is the DSP BlackRock Tiger fund. Within the category, it has done middlingly okay. But again, as a category, I think for an investor, one should not really go into sectoral or thematic kind of funds. Again, for the amount of investment that he is making, he has too many funds. I think stick to all his funds are good. Axis Long Term Equity is an excellent equity linked savings scheme. You need more tax breaks, increase your SIPs in that. Choose one of the two between HDFC Mid Cap or ICICI SBI Emerging Business that he has. Choose one of the two. Okay, ICICI Pru Balanced Fund is a good fund. It's a balanced fund. If he needs a balanced fund, that's a good fund. But I think consolidate is the advice that I would give.
All right, Harsh, Sharmila, thanks very much for joining in today and answering all of viewers' queries. We need to wrap up on that note, but do stay tuned. Closing bell is coming up in just a bit, and do remember, keep sending us your stock queries by posting it on our Money Control message board. Do stay tuned. The last hour of markets lined up with closing bell.
CNBC TV 18, celebrating 15 years of leadership.